Hello guys, welcome to School Tech Discovery guys. Yeah, in this video we're going to be talking about dowjones, right? Dowjones, which we all popularly know as an indices in the forex market. We're going to be talking how to know the peep movement of dowjones. Actually, it's not actually called peep movement, it's called points, because it's this, like with the stock, with the 30 top companies in the US. So guys, now we are going to be talking about it, but before then there are some things that we need to understand, like example peep, and point, so in some of our videos in the past we talked on peep, and I'm going to be dropping those videos below description so that you guys check it out. Right, so we're just going to be focusing on point because of time. So if you see, what is a peep is the unit of measurement to express the change in value between two currencies. Right, take note of this part, between two currencies, as you can see here. Why is this? Is because in forex pairs, like currencies that pair with with different currencies. Example is the USD, right? USDJYP example. So between two currencies, the change in value between two currencies. We've discussed peeps on currencies. I told you I'm going to drop the video below, but I'm just trying to point this thing out for you to understand. But a point, as we can see, because we are dealing with US30, we have to understand point, which we can call it peep. We just want to calculate the movement of change in value, right? A point is a unit of measurement to express the change in value, right? As you can see here, we have just only change in value. There is no between two currencies. The reason being is because US30 is just on its own. It's not trading itself against any other pair, right? It's only just combined the raw, puts in all the figures of the 30 best companies in the US. Right, so as you can see, I give example, points example. Now I say if a US30, the indices, moves from 35, let's assume US30 is currently $35,000, right, and it moves from $35,000 to $35,001, that one you see here, it's what we can call 1 point move in the forex in stock concept, right? Because US30 is indices that combines 30 stock companies or 30 best companies in the US, right? That's why it's called US30. So if this moves again to 2, we say we have 2 points move. If it is moved from US30 moves again 35,000 to to 35,003, you say 3 people move points, right? If it moves from 35,000 to 35,004, we say that 4 points move, and so on, right? So but how do we say, okay, this is exact money we are going to make if 1 point makes a move, if it's 2 points that makes a move? That's when I talked about peep value. We have to understand peep value and the profit and loss. So I did videos on all those in the past. Make sure you check below the description, but quickly we are going to address that. I said there is a formula for peep value, how you calculate. If you want to know how many numbers money you're gonna use when points run or peep value, you have to understand what we call contract size. And contract size, I think they varies between brokers, but I don't know. So whatever broker you're using, you need to find out. Like me, I use SNS, check below of this description. You're gonna see the contract size of that particular instrument with your broker, right? So for XNS, it's 100 for indices, I guess. So the formula is actually peep value, right? Peep value. Just take your time and watch this video carefully. I'm going to write it here for you. right? Pip value, I talked about this before, right? So check below the description of this video, equals to number of what? Number of lot size of lot times, you know, we have contract size. This is the formula. Take note of this formula. Contract size times the pip size. So this is what you need to know if you want to know any instrument in terms of how, when they run in points, when you run in pips, whatever lot size you use. So suppose, let's say I want to use 0.01. Let's make this calculation. This is my lot size. I want to get a pip value, like how much I'll make if the trade go my way per pip or per points, right? Example, we are using US30 as the instrument, so you have to know the contract size for any instrument you want to trade. In currencies, most of the currencies pairs are usually 100,000 in contract size, except for USDJYP that I think it's 1,000 or 10. I'm not sure about that, but for gold it is 100. So US30 indices also is 100. So you have to check with your broker. So let's say I want to use 0.01. I want to know the lot size. If this lot size moves by 1, how much I'm going to lose, because the US30 is very volatile. So it's 0.01 times the contract size, which is 100, times the pip size. The pip size is 0.1 for these indices, but usually in currency pairs, take note, it's usually 0.001 in currency pairs. So you have to find out your broker what are the pip size and current, you know, for currencies or whatever instrument you want to trade. So if you check this this will also give us what? 0.01, right? It's gonna give us what? 0.01. Definitely, as you can see, 0.01. This is the lot size times 100, right, which is $1, times the pip size, which is 0.01. we have 0.01. So if you have 1 point and use that lot size, you are going to what? Per point, because you are dealing with what? US30 is you're gonna have 0.01. But usually for currencies, if we are calculating 0.01 lot size, we are expecting 10 cents, but you are having 1 cent in what? In indices, or rather I say stock. This is because the contract size is small and the market is highly volatile, right? So suppose, let's say we want to calculate GBP JPY, USD JPY, and GBP USD, for instance. We're gonna say 0.01. I want to use 0.01 as my lot size. The contract size, which is 100,000, right, times 0.0001. This is the pip size for currencies. You see, we're going to have 10 cents. That is why if the price for currencies move 1 pip and use a very mini lot size, which is 0.01, you have 10 cents. If you use 0.1 lot size, you have $1 for currencies. But 0.01 in US30 will give you 0.01 times 100 times 0.01. You see, guys, we have 0.01. Then if you use 0.1 times 100 times pip size 0.01, we have 10 cents. Can you see, guys? We have 10 cents. So this is the explanation I'm giving you guys. So you have to take note of this. So since you've know the contract size for US30, the contract size is what? I'll put by the side 100 with my broker XNES. So you can check with your broker. But I'm quite sure every broker is literally like the same. I think so, but I'm not sure 100%. We're quite sure, right? So pip size is 0.01 for indices, like things like Nasdaq, and all that. Usually known as Nas 100. This is the same way you calculate it. They are calculated by points. Now, the difference between US30 is the 30 best company in the US. Nasdaq contain the tech companies like Facebook, Amazon, I don't know, tech like what's it called? Maybe Twitter. Talk about Facebook, Snapchat, and all that tech companies like that. You understand me? So as you can see, how to calculate pips on US30 example 2, which I'm going to be showing you guys before we go into the chart. So you see this 35,001 is 1 point. You see the difference here? 2, 1, 2. You see we have 3 all this side like this. You see, so 4, the difference is just 5, right? So when it moves like that, it change to have 7 points, 8 points, 9 points. All right, so imagine I'm using this lot size 0.01, which eventually is going to give me, for every per point I'm going to have 0.01. It means that if I have 9 points move like this, maybe I bought at 30,000 for instance. Let's say I bought US30 at 30,000, 35,000 for instance, 35,000, right? It was able to move from 35,000 to 35,009. That's a move of what? 35,009. A move of what? 9 points. So all I just have to say 9 times this, which will give me 0.09, right? So this is simple calculation, guys. There's no two head about it. It's very easy peasy. It's easy peasy, right? 0.01 times, let's just say 9. You see, 0.09, right? So you're going to be having 0.99 cents just using 0.01 lot size for 9 points move. All right, so the reason is because the market is highly volatile. So this is a 4-hour time frame, as you guys can see here on my chart, and you can see the current price is ranging from 33,000 to 34, right? I'm going to show you guys something quickly. So this 1 minute time frame right here. Excuse me, I think my network is bad. So guys, as you can see right here, this is 35,000. This is 1 minute time frame, right? As you can see, this 35,310, right? 310 from 35,300 to 35,310. That's automatically 10 points move. 10 points move, right? Suppose I'm buying from this place, guys. I'm buying from 35,000. I'm buying from 35,000, right? 35,000, and let's say I want to take profit to 35,320. Let's say I want to take profit of 35,000, right? Sorry, 320. This is my entry price, for instance. E equals entry price and ET equals exit price, for instance. I'm just giving you an abbreviation. So if you check this, when you minus this highest one from my entry price, we're gonna have what, 320, right? That's the difference, right? So it means that this one is 320 points move, right? 320 points move. So now that will determine the type of lot size I'm using. Let's say, okay, I want to use, no, sorry, yes, okay, I'm coming. I want to check something to be sure of what I'm saying. Okay, I entered at 35,000. The price is not actually 35,000. Let me use a price that we all can see so that we don't get confused. Let's say 35,300. 35,300, because that's huge, massive movement. 35,300, right? So it means that we have 20 points move from this place. 20 points move, right? So suppose I'm using 0.1, right? This 0.1, then we gonna say 0.1 is gonna give us 10 cents per point. From our calculation that we did, we said the peak value equals the number of what, lot times what, times contract size, right? Then we say times what, the pip size, right? So if we're going to calculate this, we're going to say lot size is 0.1, right, times 100, which is the contract size, times pip size 0.01, which is still going to give us 0.1, right? So per pip we're going to have 0.1. so all I have to do is to say 0.1 times what, times 20. So if we say this, what we're going to have automatically we are going to have $2 dollars. So using 0.1 times, let me show you with calculator, guys, so that you see practically what I'm saying. So using 0.1 times 20, right, you see we have 2 pips. So it means $2, because that's in dollars. So what it means is that if you successfully buy at this 35,300 and you exit the price on this using this lot size, you're going to be taking out $2 from 20 points move. Hope you guys understand me, right? From 20 points moves, because this market is very highly volatile. Yeah, so you need to understand this. So imagine if we say, okay, we are using just one lot size. One lot size definitely is going to be equal in US30 $1 per point, right? So automatically if you are using one and it moves from 20 points to 20 points, it means we're going to have $20 from what I've just explained, right? So this is a clear example, guys. So if you are taking a sell order here, can you see it's the same thing, but you need to understand the difference between, it's just, we all know, if you've been doing this trading game before, or you just new, you know, sell is also just the difference in movement. Once that your analysis, like what you do, you analyze the market and it goes to your favor, whether you want to take short or you want to take sell, you want to buy, sell, you have the bias to buy or bias of sell, and you place the trade and it goes your favor. It means if you are selling, it means it has to go down. So the differences between the entry price is how you're going to make the points, right? So suppose we enter at this price, which is this side here, 35,000. Can you see, guys, what this cost? This cost 35,220, and you take profit, maybe take profit this side 35,209, right? We entered the price at 35,320, and let's say we take profit of 35,208. So 35,000 let's say 35,300 is our entry price, right? I want to show you guys quickly, so don't. Entry price 35,300, and we exit at this place, at this side here, right? 35,208, 208, exit 35,208, right? And we are using one point lot size, right? So automatically we are going to have 35,000 minus, 35,300 we minus from 35,208, right? So we're going to have the total of if you see this, maybe 92, right? 92 pips. 35,000 minus, 35,300, 35,300 minus 35,300, okay, minus 35,208, right? You see 92. So it means we have 92 points, right? Or rather, you want to call it pips, it's up to you, but you have to use the formal way. In indices we call them points, right? And in currencies we say pips. So because these have no differences between currencies, right? So this is actually a point. So 92 points using one lot size is automatically $1. I've proven to you how we came to that using whatever lot size we use to give us $1. So check some of my videos. I've talked about pips, and talked about profit and loss, how you calculate pip per value, how you calculate profit and loss as well. I've talked about all those things in previous videos, so make sure you check the description of the video. I hope you understand this video. If you don't understand, you can actually reach out to me on any of my social media, on Twitter, my Telegram group, my Instagram, Facebook. So make sure you be part of my community, and feel free to ask me whatever question you want to ask. I'm gonna be so happy to welcome you guys. Thank you so much for watching. Let me just go take this call. God bless you guys.